Let's continue the conversation. New home sales took a steep drop in November, falling over 12% from October as affordability continues to challenge consumers. But as mortgage rates continue to fall, is recovery on the horizon for the housing market? For much more and that question, our next guest predicting just that, calling for a supply-demand dynamic shift. Meredith Whitney, who is the Meredith Whitney LLC founder, joins us now. Meredith, thanks so much for taking the time here this morning. Let's begin there. What is really going to be the catalyst for the shift? Is it rates alone, and does that do the job?
You've got two major demographic shifts going on within the country. And I think your prior guest was great, super cool and super smart. I would break this down regionally because I think that's very important. So first of all, the U.S. economy is remapping itself regionally, and it has been since the great financial crisis. So you see more growth in areas like Texas and Florida, Utah, Colorado, South Carolina, and you see population migration going along the lines of economic opportunity and economic growth. So there's more job creation in those states and less job creation in states like New York, New Jersey, Pennsylvania, Ohio, Illinois. So you've got that trend going. And so you see more housing demand in states like Texas, all those states that I mentioned, and less housing demand in areas where there's less economic opportunity. And then the other major demographic trend you see is the aging of America. So what's called the silver tsunami is 10,000 people a day turning 65. And by 2030, the entire baby boomer population or generation will be over 65. So that'll be 21% of the U.S. population. So there'll be more people over 65 than under 18, and that creates that will create a different environment, and will be lasting several years. So the AARP estimates that 51% of people over 50 downsized their home, and people over 50 are 74% of total U.S. homeowners. So if you just take half of that, you've got about 30 million homes that should be coming on the market. And the peak in existing home sales was 2005, when you had around 7 million transactions. So you've got a big sort of pig through the python that will start, I think, later part of 24 and go on for the next several years. So that, I think, is what's going to be reshaping housing in America. And I think that's what will put regional pressure in terms of more and less on home prices.
Meredith, that silver tsunami that you're talking about, can you dive deeper into some of the, what environment does that create? So you have all these homes potentially coming to market. Does that severely weigh on prices, or do prices eventually start to take off because people are, let's say the millennials, are in there buying these homes potentially a little bit cheaper than they thought?
Well, again, there's going to be more of a price weighting on areas where millennials or new home buyers are not going to be, right? That's where you're going to see the supply demand differential, right? You've got a demand supply imbalance now. There'll be a supply demand imbalance, I think, over the course of the next several years, probably 5+ years, beginning, as I said, in the latter part of 2024. So I think that, I think you're going to see, like I said, regional pressures. And for the millennial, or you've got the lowest household formation rate you've had in 160 years. Millennials aren't getting married. They're not buying homes. They're choosing not to buy homes. You have more like a demographic of young men who don't have very little interest in even dating. So that's Pew Research. So 50+% of young men have no interest in dating. And so that all these trends are ultimately going to weigh on the housing market. These are just undeniable trends that's going to impact things. And, again, it'll be regionally more powerful in some areas than other areas. And I think your prior guest's estimate of a 1% decline, you could see 20% declines in some areas, and you could see housing in areas like Texas and Florida continue to go up.
One of the main issues we see in the coverage that we provide here, Meredith, is that housing affordability is likely to be a key issue during the presidential election season next year. So this silver tsunami you're talking about, does that crowd out lower income households? And then if so, where do they go? Do they just become a nation of renters?
I think that, there'll be a large portion of people that are renters, which 35% of people rent in the United States today. But I think that what will happen is prices have to come down, because if you have more people selling than buying, that invariably puts pressure on homes and increases home affordability. And I think you're going to see that in areas. So look, you've got the greatest housing permits and construction going on in Texas, less so Florida. You don't have major home construction in places like California and New York and New Jersey and Connecticut and Pennsylvania and Illinois. So you're going to see more affordable housing being created by new home builders, and you're going to see existing home prices come down.
Where do you envision that banks are going to have to create within their own systems and their own models even more leniency when they're evaluating potential home buyers, considering that for home buyers now, especially millennial home buyers, the costs are vastly different that they're trying to move through, whether that be just coming off the cost of education, whether that be trying to get out of one city into another. Where is there going to have to be some type of malleability in what's historically been a model that they could just lean on and say, yeah, we'll guarantee that we're going to back you for this house?
Well, 70% of mortgages are outside of the banks now. So that's since the great financial crisis. So you're really dealing with like a Rocket Mortgage or other independent non-bank mortgage companies for that. But they're not going to have the leeway to do that. It's really going to come or could come from government programs. And you have a lot of government programs whereby you can put very little down for a down payment. It's just the servicing that becomes expensive. But if you lower the overall home price, the serviceability becomes more affordable. That's what I think is invariably going to happen, because you're going to have more seniors, the silver tsunami, selling, and there are fewer buyers. So the give is going to be lower home prices. And to tack on to your question from your prior guest, advice to millennials, that advice is to wait. Advice to boomers is sell, right? The sooner you sell, the higher price you capture. The longer you wait, the lower price you buy at. So I think it's a cat and mouse game.
You mentioned the government programs. Does that place the housing market on the ballot when you think about the general election next year?
It all depends, right? So the issue is, I think that the current administration has been somewhat misguided in terms of the student debt relief is not going to encourage people to vote for the current administration. That sort of gas has already been spent. And in terms of then catering to millennials or catering to certainly the bottom half. I divide it into, it's not just the big group, the millennials. I call them the avocado toasters, which is the lower half of the millennials, 38 and under, and then the Gen Z. So you've got to capture, those are the guys that you want to bring into the housing market. The older millennials already in the housing market. So the big gap in home ownership is those for 38 and under. And it's unclear that creating programs to incent that group, that cohort, to buying homes is going to guarantee votes. That doesn't mean they won't try, but it's unclear. Now, the issue then, more affordability, if you want the seniors vote to refuel the housing market, that might work, but it's unclear. Look, the seniors have so much equity in their homes. So 20 trillion in equity was created since the global financial crisis. So if home prices come down, people are still making enormous sums on the largest asset in their wallet.
Meredith, always a pleasure to get some of your insights, your perspective. Really great having this conversation with you. Happy holidays.
Thank you. Happy New Year.
And Happy New Year to you as well. Thanks so much, Meredith.